Hi, Monica.
Hi, Dominique.
How are you?
And how are you doing?
It's so weird that I can't see you in person.
I know.
It's
Been
so
stuck
weird.
in. Safety
Right,
first.
right. Safety first.
Yeah.
I wanted to talk to you again because I know we're coming up on May 1st, which means we're coming up on, for a lot of people, if they haven't made their first mortgage payment, since all of this started.
Right.
But they didn't make one in April. They're coming up on 30 days. And I've been hearing a lot of misinformation and myths around the mortgage forbearance and what that means. And so I thought it would be a good idea for us to talk to people who currently own their homes about what they should be doing to, like in response to this crisis.
Right. Okay.
So do you first, I know we had some other talking points, but do you have any notes or guidance that you can offer around the mortgage forbearance and like what's been sort of issued to lenders recently?
Right. What that means. And first, I would like to just educate everyone on forbearance, the term forbearance. Okay. So forbearance is viewed as a form of default. So I know that mortgage forbearance is in place for government loans, and a lot of people, because of the circumstances, are having to take advantage of that.
Yeah.
And I would just advise them to, before you just immediately sign up, just make sure you are gathering as much information as possible from the servicer. So first, you want to know the time frame. How long is the forbearance? How that money will be applied to the back end of the loan, because that's really what's happening. The payments don't disappear. They've just deferred the payments to the back end of the loan. Okay.
Yeah.
And additionally, they need to be asking, how is this going to be reported to the credit bureaus?
Mm-hmm.
You want to make sure that these late payments are not going to be reported to, or the months that are in forbearance will not be reported as a late payment to the credit bureaus.
Okay.
More recently, I've heard actually a client of mine was put his mortgage into forbearance, and his servicer does report it as being in forbearance, but they're not reporting late payments. And that's the important piece. You want to make sure that they are not going to report the mortgage as being late, because
Okay.
you're not making the payment and you've put that mortgage into forbearance. Because certainly, the mortgage, if it's being reported as being late, that's going to have a major impact on your credit.
Right.
So that is one of the more important pieces of that, to just make sure you gather all the information before you do that. Make sure you understand the terms of that forbearance and how that's going to be reported to the credit bureaus. Now, because this is fairly new, the word forbearance being associated with that mortgage, I really don't know if that's going to impact the scores or not, because it's fairly new. People are just starting to put their mortgage in forbearance, but I do know that some servicers are telling their homeowners that they are not going to report as being late to the credit bureau.
Okay. So that's good. If they
that
don't,
is great information. You just want to make sure that's going to be the case, and that applies to your circumstances.
Okay. So that's helpful. I have been thinking about, past clients who I sold homes to, and I'd also seen a few celebrities and like experts give advice around forbearance, and that if you can save your money, you should, right?
Yes.
So if you can call them and get this forbearance, not, with all the information that you just gave, but just if you can get this forbearance and keep that money in your pocket, because we don't know how long this is going to happen, that's the best way to go. And so I really wanted to make sure we address that, before it's too late for some people, because if you don't have a choice, then for sure, get all the information you can and do the forbearance. But if you do still have income, because I think there are a lot of people who, are working from home or still working outside of the home. They still have the same income, but their social lives is what's been impacted the most.
Right.
And so those people, I wanted to make sure we were addressing them in terms of, what should you be doing with that mortgage payment money? Or maybe not even what should you be doing, but what information do you need so you can choose the best option for yourself?
I would definitely recommend saving the money because of course, we don't know how long we're going to be in this COVID-19 environment. We don't know the impact that this is going to have once we come out of this environment and things start to stabilize. We're still subject to, heading into a recession. We're still subject to businesses closing down. So we don't know the impact. So it is best to, be budgeting and saving the money. And once you come out of forbearance, and the thing to consider while you're in forbearance, and I didn't mention this, are taxes and insurance. And I think we may have touched on that before. So you're not, you need to make sure, how the servicer is going to handle that. And while you're in forbearance, are you going to be responsible for paying taxes and insurance? When you come out of forbearance, are you going to be responsible for paying taxes and insurance? Although the mortgage payments itself may be tacked onto the back of the loan, you may be responsible for some taxes and insurance payments. Right. So you should be saving your money because we just don't know just what's going to happen when we start to stabilize a little more. The economy starts to stabilize and we are coming, I guess, on the downside of COVID-19.
Right.
So yes, saving is, we should not be just, I guess socially, most people are not moving around much. So no online shopping. That's probably right. Cut out the online shopping.
Such a hard thing right now. But okay, so I also wanted to talk to people who currently own their homes, who may or may not have been impacted income-wise, about a couple of different options.
Okay.
So one of them being, how can I keep my house? Like, what are the things I can do if I anticipate losing my income, or if my income has decreased, but maybe not gone completely away? What can I do to keep my home?
Well, there's a couple things. Right now, rates are very low. So if your income has not been impacted or not drastically impacted, you may be in a position to refinance and lower the payment. So that's always an option if you have a higher rate. You could also look at, let's see.
I have been advising people to refinance for sure. Like if you can go ahead and refinance, I've been comparing it to a forbearance in the sense that when you refinance, just like when you buy, you do have that little period of time between when you close and when your
first payment. Right.
Yeah. So that gives you a little bit of relief.
It does. It can give you, you can skip at least 1 month, but possibly 2, just depending on the time frame that you close and the parameters of your financing, your refinance.
Yeah. And if you refinance, your payment could be lower than what it is now.
Yes, it will be. I mean, the goal is to refinance to lower the payment. So again, if your income hasn't changed, or maybe if there's just a slight change in your income from what it was before, then you may be in a position to refinance, lower the payment, and be able to skip at least 1 month of that payment. So that can give you some relief and be able to put a little extra money aside. A lot of my clients are able to skip 2 months. It just depends on the parameters of the finance.
Right. And when you close.
Another thing that I was speaking to a friend of mine some time ago, and she was mentioning a past client that had decided to rent out space in their home. So some people are, in order to save their home, they're exploring those options. You may have family members or friends that may be in a similar situation, and just by combining that income, you may be able to not only help yourself in terms of saving the home and saving money, but also be able to help family members and friends. So that's another option that people want to explore.
Yeah, I have a cousin who bought a property a few years back, and I remember talking to family about
Mm-hmm.
him buying property, and my aunt and uncle kind of felt like he's not really ready to buy. He should just rent for now, and he was moving out of their home and buying his first home.
Ah,
And so
okay.
I was explaining to them that I said, the difference between him moving out and renting versus moving out and buying, besides the price, is if he moves out and buys something and something happens where he loses his job or something, he can move back in with you guys the same
Correct.
way he would if he had been renting, right? He would
Mm-hmm.
move in with family. But if he owns it, he can rent that out
Yes.
and possibly even make a profit while he's getting back on his feet.
Yeah.
And so I think for sure that's something that people should consider in terms of being able to keep your house. It's
Right.
like there are still people who are renting,
Mm-hmm.
who are looking for, somewhere to rent. And I think the advantage we have in our area in particular, in the DC metro area, is that a lot of us don't have to really worry about a loss of income in the same way as the rest of the country because of
Right.
the government and a lot of our
Location. Mm-hmm.
right, a lot of us are either working for the government or somehow affiliated with that, and that
Mm-hmm.
provides extra stability. So a lot of those people, are still looking for some place to rent, looking for a place to stay. And so that's one way that people definitely could keep their houses
By just
longer.
coming together. Yeah.
Right.
Coming, yeah,
And I
and
think,
renting out rooms or a basement or whatever the case may be.
right,
Yeah.
right. I've considered it myself, like as my sort of one of my plans, my maybe plan C is, I could move in with one of my parents and rent
Mm-hmm.
out my condo and then be able to keep it um,
Right.
longer. So I also wanted to talk about the possibility of, not that I want to tell people not to pay their bills, but
Yeah, sometimes,
um,
life happens.
right. Considering we've heard about the mortgage forbearance, but we've
Mm-hmm.
also heard that utility companies cannot turn off certain utilities.
Correct.
Um, and so I wonder, should we be prioritizing paying the mortgage, knowing the credit impact, versus prioritizing paying the utilities right now?
I think that may be something to consider. Not just utilities, but student loan services are also offering deferments.
Right.
Insurance companies like auto
Right.
insurance and car payments. A lot of the industries are offering some sort of deferment or forbearance right now on your payment. So
Mm-hmm.
if that is the case and and you have those bills, those monthly bills, and you can make the mortgage a priority by shifting the money that you would normally pay towards your student loan, your car payment, your car insurance, or utilities, you make
Yeah.
that mortgage payment a priority. I think that definitely puts you in a better position
Yeah.
because when there are mortgage lates reported to the credit bureau, that has a larger more significant impact on credit scores than some of the other bills. The other
Yeah.
bills like your car insurance or your student loan.
And some of them don't report to the credit bureau. So if you're going to be late on something or not paying something,
Mm-hmm.
that would be the way
Choose
to go.
those things. Utilities, auto insurance, those things do not report to the credit bureaus.
Yeah.
So yes, making the mortgage is a priority because the home is an investment. We view it as our home, the place where we raise our families, but in the larger picture or scheme of things, it is an investment. So you want to make sure you're protecting that investment. Yes.
Right. Absolutely. So the other thing I wanted to talk about, like, of course, as much as possible, keep your house if you can, right? Like
Yes.
do these things to keep your house. But if you are in a position where keeping your house is not necessarily a possibility, how can you keep the wealth that you've accumulated in that house, right? Like you just mentioned that our homes are investments. And so for a lot of us, because our housing has been doing well in this area, you're likely to have some equity depending on when you bought it. And so like, how can you hold on to that, especially if you have been impacted significantly in terms of income? So my suggestion is to sell your house.
Right.
I think
I would suggest the same thing.
Yeah, there are a lot of people who don't know. According to the federal government, real estate services are essential, and there are a lot of people who don't think that they have that option because they don't know that people are still very actively buying.
Yes, they are.
And so
even from virtual tours.
Right.
We'll get to that.
Tours and pictures and virtual open houses. And, you know, the real estate industry has pivoted and is still, I think, being really innovative in finding other ways to pivot the services that we typically offer so that people can still buy. But most of the people I know who like people who've reached out to check on me since things have started, they assume that, oh, I'm sure things have slowed down. And I'm like, actually, they've picked up.
And I know people find that hard to believe, right? I didn't expect it either, but they have picked up.
They have. But I think selling your house, I'm one who's always a champion for first do what you can to keep it because it is an investment.
Correct.
And obviously the longer you hold it, you know, in most cases, the longer you hold it, the greater the reward. Right. But if that's not an option and you are seeing that your income has been impacted or will be, then maybe you can salvage the wealth that's there, the equity that's been built by selling it before you get to where you can't make a payment.
Exactly. That would be my suggestion. You know, oftentimes because we view it as our home, the place where, you know, we have our families, we raise our children, we try to hold on to it at all costs. Right. So if you are in a position where you see that in the next 5 to 6 months that you are not going to be able to financially afford the home, although it's a tough decision to sit down and make the decision that now is the time to sell, you want to be able to salvage as much of that equity. You want to be able to salvage as much of your assets, your savings. You don't want to exhaust your savings, exhaust your retirement accounts, because at this time, you know, people are able to do hardships against their retirement. You don't want to exhaust those things only to be in a position, maybe not 6 months, but 8 to 9 months, and you're in the position where you still have to sell.
Right.
And now you've exhausted your assets, your savings. You have incurred negative marks on the credit report, like late mortgage payments. And now the only option you have is to sell the home, to just get underneath of it, from underneath of the home. Or you hold on to the very last moment and the home is foreclosed upon.
Right.
But you don't want to be in that position where it goes all the way to the end, because then you walk away with negative marks on your credit report and no assets, no reserves, no equity. You've given all that over to the bank.
And I think too, you know, we talked about this for keeping your home, but also for keeping the wealth in your home. If you can move out and rent it out, you can keep, you know, the income from that coming in. So you can still be making the mortgage payment and hopefully some extra money as a profit while you are trying to figure out, while we're all trying to figure out this crisis.
What's next? Yeah, what do I do next? And this may, back to the whole renting, this may be the time for a family to come together and, you know, retain some of the wealth within the family. Maybe
Right.
this person sells their home, you know, because it is an investment, and you can sell your home. And once you recover from COVID-19, the economy has stabilized, people are back to work, you can go out and purchase another home, another investment.
Right.
And you haven't exhausted, you've brought your funds together, combined your funds, saved some of the family wealth, and still be in a position, maybe not just for yourself, but just as a family collectively, to purchase another investment. So that is a way to retain family wealth, keep that going. So it's generational, you know, we have something to pass down. You know, years, many, many years ago, that's what our parents and our grandparents did. They came together, they brought their funds together, and that's how they were able to, you know, purchase property or start businesses, just retaining family wealth. So although it is a tough decision to say, hey, I have to sell my home, you know, it's not a good position to be in. It may be the best position. And if you see that coming down the road, don't wait until you get down the road and you've exhausted all your means and you really have to go back and start from ground zero.
Not to mention the credit impact of that. Like you brought up foreclosure, which I think, you know, the last thing that I think is really important that we discuss is how to maintain your credit and how to, you know, like depending on where you are in terms of income, you've got different options. But if you can, if you have lost your income, what can you do so that you can still salvage your credit while we're dealing with this crisis? And I think your point about foreclosure is a good one, because foreclosure comes after months of not paying and comes after, you know, the bank has possibly reached out to try to figure out how they can salvage your ability to pay. You know, maybe they've decreased your payments or like whatever, giving you a forbearance. But at the point where they're foreclosing, you've sort of exhausted all of those options. And what's, I think, interesting about foreclosure is we do have the option of short selling. And everyone who gets foreclosed isn't necessarily in a position where they need to sell their house short, but I think a lot of people find themselves in that position, and instead of taking advantage of short sales, they end up foreclosed. And, you know, so I wonder, I think it may be, okay, now I still have income, I could sell, to, I don't have income anymore, I could short sell, to I don't have income anymore, and I've been, you know, not able to make payments now for a long time, so I'm facing foreclosure.
Yes. I think the key is to, like I said, although it's not easy to sit down and make those tough decisions, we just cannot we can't ignore it, because it's not going to go away. So if you're in a position now that you foresee things, we really don't know what's, you know, we're all speculating as to how long we're going to be in this type of environment. We're not able at this point to see what the effects may be a year from now, a year and a half from now on businesses. So if you're in a position now where you have income and you foresee that maybe in a year your financial situation may change, now may be the time to consider, how about I sell this property, rent from a family member, or downsize to something that I can financially afford, and not wait until I get to the point where, you know, my credit has blemishes. So now it's difficult for me to get any type of credit. I've exhausted my assets. So now I have no savings. And I've waited till the very last minute I've ran the clock all the way out to foreclosure, and now I walk away with no equity. Whereas if I would have taken some action a year ago, 8 months ago, then I may be able to walk away with $30,000-$40,000 in equity, because we have seen appreciation in property over the last several years. So it's just about really sitting down, making those tough decisions, taking action, and not just running the clock out.
Yeah, absolutely. Absolutely. It's really hard decisions to make, like you said. But I think that's why it's so important to be informed about what your options are, so that you can think clearly about how they would each impact you. And I think, we're having this conversation because of the coronavirus. But this applies in general. These are things like we could do at any point if we find ourselves like under some kind of financial duress or like facing financial instability. Like, these are the things we can do to either keep our houses, keep the wealth, or, salvage our credit.
Yes.
If we're current.
All of the above. Yeah, we want to accomplish all of the above,
Right. All of the above.
all of the above will put you in a position where you can acquire another investment, maybe in a year or 2 years from the date you sell the property, because you walked away with some equity, so you're able to build up your savings. Your credit is intact for the most part. It's intact, and you're in a position where you can, when you're financially ready, can purchase another investment. So we want to accomplish all those things if possible.
Okay. Is there anything else you want to add for the people?
I think that's it. I think we covered everything we wanted to chat about today.
Okay. If you all have questions, you can reach Monica on Facebook and Instagram and via email.
The email, yes. Can we post those things? I guess not, huh?
Yeah, I can post them.
Okay, so my email for everyone is Monica, Monica, .Atkins, A-T as in Tom, K-I-N-S, @Fitzgerald, FITZGERALD, financial.net. So you can always reach me on my email.
Okay. And I'm Dominique Lamb, real estate broker for the Haven Firm. So you can find me on social media or email me at dominique@havenfirm.com. And, if you have any questions about what we already discussed or something else that you think we should be discussing, let us know so we can.
Please let us know. Please let us know. We're all, we're not in the offices, where most of us are home working. So it's a great time for us to connect via social media and have these types of empowerment conversations.
Right. Absolutely.
Yeah.
Thank you, ma'am.
All right. Thanks, Dominique. Talk to you later.
Okay.